Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is September 17th, 2025, and we're diving into the latest earnings report from Manchester United. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Manchester United's financial performance, especially given their iconic status in the sports world.
Absolutely. Manchester United has just released their fourth quarter and full year fiscal 2025 results. Let's get into the details. Revenue and profitability overview. Let's start with the top line. Manchester United reported total revenues of £666.5 million for fiscal year 2025, with fourth quarter revenues at £164.1 million. John, how does this compare to last year?
Well, the total revenue saw a slight increase of 0.7% compared to the previous year. This growth is primarily driven by strong commercial and matchday revenues, despite a decline in broadcasting revenue. The operating loss has significantly narrowed to £18.4 million from £69.3 million last year, thanks to improved cost management and operational efficiencies.
That's quite a turnaround. And what about their adjusted EBITDA?
Adjusted EBITDA for the full year was £182.8 million, up 23.8% from last year. This indicates a strong underlying performance, reflecting the club's efforts in cost control and revenue generation.
Commercial and matchday revenue insights. Commercial and matchday revenues seem to be the highlights. Can you elaborate on these segments?
Absolutely. Commercial revenue reached a record £333.3 million, a 10% increase from last year, driven by new sponsorship deals and a successful e-commerce model. Matchday revenue also hit a record £160.3 million, up 16.9%, thanks to more home matches and strong demand for hospitality.
It seems like their commercial strategy is paying off.
Indeed. The new sponsorship agreements and the launch of their e-commerce platform have significantly boosted their commercial revenue, showcasing the club's strong brand appeal.
Broadcasting revenue and strategic challenges. Broadcasting revenue, however, seems to have taken a hit. What are the factors at play here?
Broadcasting revenue fell by 22% to £172.9 million. This decline is mainly due to the men's team participating in the UEFA Europa League instead of the Champions League and finishing 15th in the Premier League, which affected their broadcasting income.
That's a significant drop. How is the club planning to address this?
The club is focusing on improving their league performance and exploring new broadcasting opportunities. Their strategic investments in the squad and infrastructure are aimed at enhancing on-field success, which should eventually boost broadcasting revenues.
Operational efficiencies and future outlook. Let's talk about operational efficiencies. What steps has Manchester United taken to improve their cost structure?
The club has implemented a transformation plan to enhance operational efficiency, which includes reducing non-playing staff costs and other operating expenses. Employee benefit expenses decreased by 14.1% to £313.2 million, reflecting these efforts.
And what can we expect in the future?
For fiscal 2026, Manchester United has introduced revenue guidance of £640 million to £660 million and adjusted EBITDA guidance of £180 million to £200 million. They are optimistic about their cost reduction program and the potential for improved financial performance.
EPS forecast and analyst expectations. Now let's discuss the earnings per share. Analysts were forecasting an EPS of 6. How did Manchester United perform in this regard?
Manchester United reported an adjusted EPS of 0.0316, which is a significant improvement over the forecast and an 80% improvement year over year. This better-than-expected performance is a testament to their effective cost management and operational improvements.
That's impressive. How many analysts were covering this forecast?
The forecast was based on a survey of 2 analysts. The club's ability to exceed expectations is a positive sign for investors.